We are now moving to Chapter 10. This is question 1, and we will be determining the cost of goodwill. On March 31st, year 1, Michael Brothers Corporation acquired all of the outstanding common stock of Moser Corporation for $20 million in cash. The book values and fair values of Moser's assets and liabilities were as follows. So we have an abbreviated balance sheet here with both the book values and fair values of assets and liabilities. And we'll look at those again to help us calculate the amount paid for goodwill. Before we solve for goodwill, I want to briefly explain what goodwill is. Goodwill is any intangible asset that can't be specifically identified. It could be the value of a brand, it could be customer relationships or a certain patent or technology that a certain company has. So it's some sort of intangible asset, and it is solved for by taking the fair value of consideration exchanged less the fair value of net assets acquired, and that will give you your goodwill. So let's figure out what the fair value of consideration exchange is. And that's given to us in the problem when it tells us that they acquired all the outstanding common stock of Moser Corporation for $20 million in cash. So that's a consideration exchange that we'll plug in, $20 million. So I'll put that right here. Next, we need to find the fair value of net assets acquired. And if you recall, net assets are your assets minus your liabilities. So let's figure out what our total assets are. We have current assets, we have property, plant, and equipment, and then we have other assets. So if we look at the fair value of those three, that's going to add up to be $24 million for our total assets. So we'll plug that in here. Next, we need to find the fair value of the liabilities assumed. That just means that since Michael Brothers Corporation is acquiring this company, they assume the liabilities on Moser Corporation's balance sheet. So we have current liabilities and long-term liabilities. We look at their fair values, it's going to be $8 million. So we will plug that in as well, and we're going to subtract that. That will give us our net assets, which will be $16 million. So now we have the fair value of consideration exchanged at $20 million. We subtract $16 million, the fair value of net assets acquired, and that's going to give us goodwill of $4 million.